Hi there, welcome to my YouTube channel. So yesterday I spoke about momentum investing, and I did mention that that this particular strategy is has been there for about 30 years now, but it's also gaining momentum or picking up, especially around COVID. So I wanted to bring that to the notice of the investors who listened to my video. And with that in mind, I'm today going to talk about the calculation. So the calculation around momentum investing. I'm going to use a graph, which is a graph for illustration purposes to show you certain elements. I hope it will be useful to you. And of course, I will show you an equation as well. So before we dive in, as usual, please like my videos, please subscribe to my channel, please smash that notification bell so that you know every time I upload a new video. Please also comment on my video so that I know what you are looking out for, and I can then craft out a video based on your requirement, and also share my videos with people who you think would benefit from my research, from my knowledge, and from my videos. So without further ado, let's dive in. So as you know, before I start, I talk about my ebook. Now this ebook is on my journey as an entrepreneur. It's titled Six-Figure Corporate Job to Master Entrepreneur. So in this ebook, I've spoken about the time back in 2010 when I quit my six-figure globetrotting corporate job. So it talks about how I prepared myself to jump into this world of entrepreneurship, what are the challenges I faced, and how I overcame those challenges. Now, I'm quite sure a lot of you would be looking to becoming an entrepreneur. So with that in mind, I have put down 3 worksheets where you could, answer certain questions and get points. And later, you would know how close you are to becoming a successful entrepreneur. So basically, these worksheets, try and track your mind, preliminary mind, before you actually jump into the world of entrepreneurship. The cool thing is I scored myself, and I scored myself based on my mindset back in 2010. So you would know how much I scored, and you would also know how successful I am today as an entrepreneur with 2 companies, one in Singapore and the other one is in India, and representations in the US market. Now, the greatest thing about this ebook is it's available for you for free of charge. It's available on my website. The URL is flashing on the screen. I'll put the URL in the description box below. Click on the URL, go to the page, put down your name and email address, and the link to download the ebook will be emailed to your inbox. I hope you like the ebook. Do give me your honest feedback. Now let's talk about the calculation. So momentum measures the rate of the rise or fall of stock prices. For trending analysis, momentum is a useful indicator of strength or weakness in the issue's price. There are many charting software programs and investing websites that can measure momentum for a stock so that investors don't have to calculate it anymore. It is important to understand what goes into these calculations to better understand what variables are used in determining a stock's momentum or trend. And that's exactly what we're going to do. We're going to try and analyze a formula and see how you can do it yourself. So, according to this person, John J. Murphy, he's written a book called Technical Analysis of the Financial Markets. So he says that market momentum is measured by continually taking price differences for a fixed time interval. To construct a 10-day momentum line, simply subtract the closing price 10 days ago from the last closing price. So now this is his formula. This is his way of interpreting. The positive or negative value is then plotted around a 0 line. Now, in yesterday's video, I've spoken about a few other types of measurements. Basically, one of them was 12-month projection minus the last month. Now that was also one type of a calculation. Now he's talking about 10-day momentum line. So he's talking about constructing that 10-day momentum line. So the formula that he's talking about is momentum is equal to V minus Vx, where V is the latest price, Vx is the closing price, and X is the number of days ago. Okay, so now this is a very simple formula that John Murphy is talking about. So we're going to talk more on around this formula and how that could help and plot a graph and see where your stocks or scripts lie. So technicians typically use a 10-day time frame when measuring momentum. In the illustrative chart below that I'm going to show, momentum is plotted for the price movements of the S&P 500 index, but it excludes the prices of the index. It is just the portfolio, the group of S&P 500, which is an excellent indicator of the trend for the overall stock market. So if you look at a graph on the right, you would see if the most recent closing price of the index is more than the closing price 10 trading days ago, the positive number from the equation is plotted above the zero line. Conversely, if the latest closing price is lower than the closing price 10 days ago, the negative measurement is plotted below the zero line. So that is very, very simple. Let's investigate further. The zero line is essentially an area where the index or stock is likely trading sideways or has no trend. Obviously, once a stock's momentum has increased, whether it's bullish or bearish, the momentum line, which is the yellow line there, moves farther away from the zero line, which is the blue line, which is currently not showing in this particular graph. Without looking at the price of the S&P 500 and only using momentum, we can see that it's likely the S&P index rallied in tandem with the spikes above zero and the momentum indicator below. Conversely, it's likely the index fell on the larger downward moves below zero. Now, if you try and analyze this using the price of the individual stocks, so if you overlay the price of the S&P 500 along with momentum, we can see the index corresponds or correlates fairly well with moves in momentum. First, in the summer, if you see the yellow box there, in the summer of 2016, the left-hand side of the chart, we can see the momentum was choppy. That's the yellow box there. While the S&P 500 traded sideways, so which is on top. In September of 2017, we can see that both momentum and the S&P broke out yellow arrows. So you see the yellow arrows going up, rallying, whereby the S&P eventually touched 2875, I think January of 2018, around there. In January and December 2018, momentum began collapsing and fell below zero, which is the orange line, the orange line which is showing the drop, taking the S&P with lower. The market rallied in early 2019, but the momentum turned bullish, again breaking above the zero. So that's the movement, while the S&P raced higher to about 3030. So this is a great example of how you track and analyze your stock or the S&P stock and the momentum. So that's a very, very great, good indicator. So keeping on with that, we can see that if momentum is above zero but not trading higher, it can lead to the S&P's price falling eventually, as in the case of May through September 2019, in between the two orange arrows if you see over there. Many investors and traders watch the moves in momentum and the S&P because if the two are not moving in sync, some things ask you. In other words, either the S&P or momentum needs to adjust. So to essentially to summarize that is that momentum investing is something that where you have to track the momentum with the let's say if you are using S&P 500 as the base, and there are many other indexes that you could use, and then you need to track that vis-a-vis that index so that you get a sense as to where your stock is moving and how much it can move, and only then you invest. Or you invested, so then you have to sell it off. Then you track it and see where it's moving. So this is a great way of analyzing stock movement and for investors to have a great return on their investments. And of course, momentum investment is not where you hold it for the long time. You can, but it's not advisable. But in some cases, you do have to. But this is not, so it's not that value investing is the long-term investing. This is more on the capitalizing on the momentum of the stock. So I hope this was useful to you. I will direct you to the video I did yesterday on momentum, the basics, and what are the different other ways to measure and calculate. What are the downsides of momentum investing? I'll put that all in that video. So I'll put it in the link to that video in the card above. Go take a look at it. I'm sure it'll be useful to you. So last, when the momentum indicator slides below zero, if you look at it, below zero line, and then reverses in an upward direction, it doesn't necessarily mean that the downward trend is over. It merely means that the downward is slowing down. The same is true for plotted momentum above zero. So obviously that's another point which you must keep in mind. So I hope this was useful to you. One last point again, momentum isn't a predictor of price movement, but instead reflective of the overall mood and fundamentals of the market. Also, geopolitically and geofinancial risks also can drive momentum and money into or away from stocks. Although it's useful or helpful for investors to understand the market's momentum, it's also important to know what factors are driving momentum and ultimately price movements. Momentum is a good indicator for determining price movements and subsequent trend development. However, it's like most financial indicators, it is best to combine momentum with other indicators and fundamental developments when evaluating trends in the market. So that basically summarizes the whole calculation of momentum investing. So like I said, do take a look at the video I did on momentum investing yesterday. I'll put it on the card above. The link to the video on the card above. Take a look at it. Well, thank you very much for listening to me. As you know, my name is Saurav Mukherjee. I'm a digital technology marketing leader with 20 years of global experience. I'll put down my LinkedIn URL in the description box below. So click on it, go to my profile page. If you like my profile page and you want to connect with me, please send me an invite. I regularly work with clients where I try and solve their business, marketing, technological, and investment challenges. If you are looking to engaging me as a consultant in your company, please drop me a line on LinkedIn or write to me on the contact page of my website. I'll put the link to the contact page of my website in the description box below. Then we can communicate and see how we can work together, how I can help you out. So finally, before I go, please like my videos, please subscribe to my channel, please smash the notification bell, please comment on my videos, and please share my videos. So until next time, stay safe and stay healthy. Take care. Bye-bye.